What's up, everybody? We are live. I'm the Crypto Crow here with my friend J Rod, the strategist, the programmer, the just jack of all trades in crypto. We'll be right back as we talk about, is bot trading really worth the shit? We'll be right back after this disclaimer. Stick around. What's up, everybody? We are back. Oh my God, oh my God. Welcome everybody to chat. I see Mark Spearman. What's up, Crow? How you doing, Mark? Derek Christopher, what about that ontology price action over the weekend? All right. Jeremy Fox, Crow, how are you? I am good, man. I'm good. Shine bright like a diamond. Absolutely. There's a lot of stuff going on. Jay McShay, what's up? Slayer fan in the house as usual. Crypto KC. So here's the thing, guys. I get a lot of questions. Doing very well, Sammy. Doing very well. I get a lot of questions from people, and I see a lot of questions online about bot trading. And I haven't been doing a whole hell of a lot about bot trading. Jeremy Fox, loving Acuitas so far. Well, that's very, very good. We're going to be using Acuitas for some examples because there's some things that I want to show people. And I brought J-Rod on, who's nice enough to join me to kind of help educate everybody as well about some very specific elements to bot trading, algorithmic trading, that sort of thing. But the Grand Dick Insiders, Gay for Crow, haven't seen you in a while. Welcome, welcome. So, here's the thing. I get a lot of questions about, is bot trading real? Is bot trading worth it? Is bot trading profitable in such a crappy market where we've got these huge swings like the ones you see behind my head? And the answer is yes and no, because it really depends on what you are doing with the bot. It also depends on, honestly, what bot you're using, because different bots function in different ways. The algorithms are coded differently. And some of them are set up for a casual end user. Some of them are set up for more hardcore users. And then some of them are set up for just straight programmers, guys who want to get in and like kind of code their own edits and mods and things like that. So you can start with as easy or as difficult as you want to. And so some of the initial things that I want to kind of explain to people is, if you look at the chart behind me, the trading view chart behind me, I'm going to make it a little bit bigger. Basically what you see is you see a trading chart. All right. Now, for bot trading to be truly effective, okay, when you're back when I was running my bots heavy, the market was extremely volatile. Okay, which, the price was going up and then back down and going up and down. And even though we were in a bull market, there were still dips. There are always going to be highs and lows in every day. I mean, it depends on the candles that you're looking at. Like, this is a 4-hour chart. Now, as somebody who's doing technical analysis, they're not using bots, but they're looking at indicators, right? So to give you an example, maybe I'm a Bollinger Band person, which I'm not really, but it gives you a pretty good understanding as to what's happening. I always joke that it looks like a big colon. Now, some people may say, okay, well, when the price gets down here, and if that correlates to the RSI, I'm going to go ahead and put in a buy order because I expect it to go back up. Right? So they might buy at the bottom of a Bollinger Band, ride a wave up, sell at the top, wait for it to come back, and just kind of ping pong back and forth, right? There are different ways that people use Bollinger Bands. I don't use Bollinger Bands, so I'm not a wizard. J-Rod's going to explain a lot of this stuff here in a minute. But let's say you don't like Bollinger Band. What I always liked is the EMA. Okay, the exponential moving averages, you're looking at a 13 and a 34. Okay, you can see these up here. And basically what this does is if I'm looking at it on a 4-hour chart, I'm wanting to see this purple. When the purple crosses down over the blue, that typically means that it's the price is going to go lower. Like that's typically when, you know, people are selling. Well, actually, people are waiting to buy at this point. What the opposite of that is when the purple crosses back over in an uptrend over the blue, that's typically telling you the price is going to start going higher. And like you'll see down here, you'll see the purple line and you'll see that has crossed over the blue and you saw an uptrend or an upwards pattern in price. And it came all the way up to here before it started to fall. And then you see that purple line falling over the blue. And at this point, this is when it's basically saying, okay, you might want to sell now, wait for this to fall lower, or watch it, wait and see what happens. If it starts to cross back up, you might want to buy back in. It just kind of depends. You're looking at volume and then you're referencing that against RSI to get an idea as to what's happening in the market. How many people are active? What kind of price action do you expect to get? So that's like an EMA. That's in like an EMA spread type thing. Now, what happens is, as a typical end user, maybe I'm just buying back and forth based off of what this EMA indicator is doing. Okay, I'm buying at this cross, I'm selling at the next cross, buying and selling back and forth. An algorithmic trading bot is basically looking at you're setting the indicators within the bot to do this all for you automatically, okay? And that's ultimately what an automated trading bot does. There are typically a variety of different indicators that any technical analysis guy or gal will utilize to effectively make swing trades, scalp trades, things like that. You can define whether you're going to do this over a 4-hour candle, a 1-hour candle, a day, or a week, okay? Typically, the further out you go, as I understand things, the further out you go, it's typically a little bit more accurate in terms of what to expect in the overall sentiment in the market, okay? So this is a weekly chart here. And so obviously this is just a downward trend, and this is a pretty good, I mean, on a weekly candle, it doesn't look too bad.
He's like, well, hey.
Hey, I haven't looked at the weekly in a while. So that's basically what automated bot trading does, okay? So from here, I'm gonna assume that everybody kind of has an idea. Sexy piece of man meat. I don't know why that just popped in my head or popped up. First thing I saw. Yes, and yes, with a big if you know how to set it up properly for different market conditions. And you're exactly right. So what happens is, you really want solid volatility for automated bot trading. Without that volatility, the likelihood of you acquiring bags that you're sitting on for a while are pretty good, okay? Especially in a bear market like this, all right? So this is just being very, very real, very honest. Now, I can pull up, you can even look at, hold on, I'm going to go to CoinMarketCap real quick. So if I'm looking at CoinMarketCap, I can see, so if I'm scrolling down, I can see basically you see a kind of a uniformity in price action patterns, right? A lot of stuff is following Bitcoin. Some things are completely separate, like Tether, for example. But the majority of this stuff, you can see it's a similar price action pattern on a grander scale. Now, if you were to zoom into this, some projects are going to have more volatility waves than others. Those would be potentially more profitable to trade with an automated trading bot than other pairs. And you can do that. You can look at that by going to like a trading view or something like that and just type in, let's say NEO against Bitcoin. All right. So this is NEO. I'm going to go down to a 4-hour. So NEO's been on a fairly decent uptrend lately, but you can see on a 4-hour chart, there's some volatility, but it's not ridiculously high. But Neo looks to be potentially, I would say, fairly profitable on an automated bot because it's going to pick up these, like from here, you would have bought all the way down. Now, this is going to be, and this is what J-Rod's going to do. We're going to basically dissect this. Like, let's say if we're setting up an EMA spread and we're looking at Neo as an example against Bitcoin, if we wanted to basically buy here and then sell it at this cross down, which would give us a pretty decent amount of profit on that one trade, okay? And so J-Rod's gonna basically show how he would set up a trading pair in Acuitas to do exactly this, okay? So that'll be the first thing that we're gonna probably have Jared do. But ultimately, you're buying these crossovers back and forth. So you would have sold here. So you would have bought all the way down here somewhere. You would have rode the wave all the way up. And then it would have sold somewhere around here in this crossover, came back up, and it might have rebought. But even when you rebought, you technically should have bought back in even lower than you would have had sold. And then you could ride that back up. So this would probably, I'm guessing, depending on how you have your bot set up, this could have been 2 trades over the course of several days. That should have proven pretty profitable. Okay. So my big ass noggin was blocking some of this. So, all right. So I'm going to make J-Rod bigger and I'm going to have him kind of go over. Will Acuitas have a demo? Yeah, smash the likes, peeps, because I want this to be as educational as possible. Because here's the thing. If there is to be, like, I know we had this big pump in Bitcoin, and a lot of people were like, could it go further? Is it, where are we going? You know, everybody was getting real excited, and I even posted on my Patreon. I'm like, I don't buy it. Like, I know a lot of people are saying that this is it. I was like, I don't buy it. Too many prominent technical analysis figures out there have been calling this, that we could rise up to like 4,500 and take a big final dump. And when you have that many people, there's just too many people expecting it, and it becomes a self-fulfilling prophecy. That's just the way I look at it. And so, you know, I basically said, like, I'm not getting super excited about this giant pump because it all happened pretty much in a very short time frame with no real explanation, rhyme, or reason to it. It didn't look natural to me. It looked like manipulation. And so I expected a dump. And then we did. But now it seems to be kind of leveling out a little bit. But again, I'm not a technical analysis guy. J-Rod here is, so we'll just put it all on his back and let him explain everything that happened and where the price of Bitcoin's going. No, I'm just kidding.
Yeah, no problem. Yeah, I'll predict you right now. Yeah, just set your clocks, folks. Yeah, yeah, you covered an awful lot. I was kind of making some notes as you were talking there. Before I get into the actual, screen sharing, you asked some questions about, like, is it worth it? Why do people do it? As part of an overall strategy, I don't see why not, right? I mean, if you're into crypto, you're going to be into some things long term. You may want to make some short term profits. It's part of an overall trading strategy, right? Because there's going to be, you can trade on a weekly candle, but guess what you're missing out on is all that intra-week volatility that you might have been able to get in on, right? You could also say, hey, for the patient trader, I don't want to mess with all of that. I'd rather just ride this longer trend. I don't want to do things all day. It's not practical to try to humanly trade 5-minute or 1-minute candles. You'll drive yourself nuts. Right?
I've tried it.
That's what the machines are for.
I didn't sleep at all.
No, and the other thing is, another big part of this is, even though you have a great strategy, ask any trader, and they will tell you the hardest thing about trading is getting the emotion out of it.
Exactly.
You did all your testing, all your stuff. You got all your eggs are lined up. You're like, okay, cool, I got this. And then you start trading, and you're like, oh shit, where's my stop loss? Wait, hold on. You're looking at it like, well, not this time. This time it'd be different. I'm going to go ahead and cancel this stop loss. We'll just ride it out. And next thing you know, you're down 5%, maybe down 10%. Well, now you're in too late, right? You're like, well, I can't sell it now. It's a guaranteed loss. And so you absorb it. Whereas a machine that you told it, hey, dumbass, when it gets down 1%, sell it and live to fight another day. That's where an automated thing kind of can be helpful. It's also a double-edged sword. Sure, human you might not have kept rebuying and rebuying and rebuying. Okay, so you need tools to keep you out of a downtrending market. And so, in my experience the last few years doing all this, more and more it all comes back to market prediction. You're trying to predict the future, really. You can't go, well, what market are we in? Because if you know what market you're in, you're golden, right? Go long, or go short. So the key is, like you said, volatility. And so your game is, look, what is my base pair? Forex guys do this all the time. They don't have any concept of, they care about just dollars, right? They care about a weak and a strong pairing because they're trying to accumulate more of the base.
That's the thing. In crypto, you've got your fundamental traders, which are fundamental guys. They're typically just investors. They're saying, okay, this company has a great team. They have a great project, a great product, whatever it is. I'm just going to invest and hold long-term and wait for them to blow up. And then you have the trader who doesn't typically give a shit about any of that. They're just looking at the charts, trying to figure out how they can scalp profits as often as possible. And so they don't even really pay attention to the fundamentals. I kind of look at it as, well, from a fundamental standpoint, those are what pairs I decide that I want to trade, so that if I end up with bags, I'm not overly concerned about it. Sure. But then I'm using the bot to actively trade those things as often as possible and try to, whether I end up accumulating bags or I'm making swing trades on the regular based off of my indicators. Either way, it's fine by me.
Yeah, and the game is to turn that volatility into more of your target, right? So yeah, if your base is Bitcoin, you're accumulating more Bitcoin at the same time because you're trading into a pair you like, with the security saying, well, should this trade go bad on me, it doesn't matter because I've been trying to play this game of acquire more base capital to get more target quote at the end of the day, right? We talked about maybe even building an accumulator strategy. Anybody who wants to try to hey, look, I want to buy lots of Cardano. Okay, great. I have $1,000 I want to spend, but I want to get the best bang for my buck. Okay, then maybe just have it set to look for dips and just buy a little bit of each dip, and accumulate over time. You can do that too. Or not now, but I mean, that's an easy strategy to make, right? I think I had one more note. Oh yeah, the other thing is you're locking in profits along the way. So, your buy and hold is one thing. I wish Colin was on here. He'd love to argue about the validity of a buy and hold metric, but it's pretty common. It is something. It's a benchmark. You have to have some kind of a benchmark. Am I trading and beating my buy and hold? Your buy and hold being, here's my entry, and I just never sell.
Right.
And
there are a lot of people. I mean, the big thing is buy the dip, buy the dip, buy the dip. Well,
sure.
For people that don't have the time to keep watching the charts to find out when the dip is, bot can do it. The bot does it for you. And in a bear market, you don't even have to worry about setting it up as like an accumulation mode. It just does it.
Right, you just lose all your money.
just turn off bear guard or whatever, and you just accumulate naturally like I have been.
So yeah, I kind of covered all those parts. So I mean, that's kind of where we're at with, it's a challenge, dude. It's not rocket science. I mean, when the markets are great, everybody's making money because the markets are going up. You're going along, right? We're not shorting. The game then is, well, who made more, right? If a pair went up 20%, well,
those that are educated and using the right tools.
Right.
I mean, seriously, when I think about it, like when the market turns around and money starts flooding back into the market, it's going to be the YouTubers and the people that are following them, learning all the little tips, tricks, tools, what to look for. Those, like, we're going to be the ones profiting off of the money that's being injected into the space from all the newcomers. It's just a natural course.
Here's another important part too, is that, it's going to be the tools that you can configure yourself. If you've got a signals guy giving you signals, okay, but you're beholden to this other source to telling you, this black box essentially saying, yeah, use your money to buy and sell on my signals, instead of, acquiring a tool that you could learn how to use and then being able to adapt yourself, and to basically be, that's a game, dude. There's always a winner and a loser. You want to be a winner, you need to have the right tools and to know how to use them. I can give you a drill, but if you don't know how to use it, you're not going to get anything done, right? So that's part of what we try to build. We try to build something that's got a good user interface and, is familiar for most people, even for new guys,
Right. Yeah. I think overall, I love, like, I am more excited about the bull market and just the general market sentiment turning around. Really just because I used to have the best time running the bots, man. Like, I'd kick my bot on, leave the house, come back that afternoon. Wow, I made $600 already. Like, it was crazy. And so I had days where I made $1,500. And the thing of it is when I first, like before I even knew what automated bot trading was, I thought it was a bunch of bullshit. Like I thought, because I would see a lot of people throwing terms around like, oh, I just turn my bot on and print money. And I'm like, that's impossible, And well, but in a sense, that's kind of how it was when I got into it.
That's how it feels, yeah.
It does. It feels like I'm printing money because I get the settings going, I test it, see how things go, and if I hit it, man, you can have a day where you make $1,000. At one point, I was trading with 2 Bitcoin. Like right now, I'm only trading with like 0.6 Bitcoin. Like I'm not trading with very much because I'm still kind of experimenting.
I think the best I did was I had I forget what pair it was. I want to say it was NMR or something pumped. Yeah, and I watched it go. I made about 1% an hour. So it was I had a Bitcoin in it, and the next day I had 1.25. I was like, this is insane.
But the fact of the matter is it's real. Like it's not a joke. It's not a scam. Bot trading is real. Now, the other thing though that I want to kind of explain to people is you see a lot of people talking about exchange volume, right? And how bots ruin exchange volume. They're not talking about like bots like Acuitas or like legitimate trading bots where there's a winner and a loser on every trade. They're talking about the exchanges using these trading bots specifically for wash trading en masse. That's what they're talking about. When they're referring to bots, they're not referring to legitimate algorithmic trading bots. They're talking about their own shit bots that are used to fluff their volume to make it look like they're bigger than they are. And because of that, the wash trading or bot wash trading or whatever you want to call it, it's because of that a lot of people can't trust the liquidity on the exchanges they're looking to trade on. And not only that, but a lot of these exchanges are working towards, bumping their volume up so that they can go to companies and say, look at us, we're doing so great. Everybody trades with us. We're getting, $10 million a day in trade volume. In reality, it's a small, tiny fraction of that. But then they're charging these companies insane listing fees for fake volume that's not even there. And a lot of these companies pay it because really there are very few exchanges that aren't doing that. And that to me is kind of disgusting, but that's the difference. So let's go into, like I brought up the example for like Neo and Bitcoin. Let's kind of go over looking at that chart. If you can share your screen and kind of show people, okay, so if we were looking at this chart, this would be an indicator that might work for X. So, and just because I pulled it up and I showed it, maybe if we could look at Neo and Bitcoin and then kind of look at that chart, maybe take a look at the Bollinger Band, look at the EMA spread, and then how would I set up like Acuitas to kind of mimic the entry and exit points of that particular chart?
Okay, hold on. Let me swap over here.
How is Acuitas now? To be quite frank with you guys, when I run my Acuitas a little different than I think most people, and different than I think J-Rod and everybody else would rather me run it, in the sense that I use no safeties whatsoever. I don't use stop losses. I don't use the bear guard. I trade pairs that I'm cool with accumulating. If it sells at a profit, great. But in this bear market, I have not been actively trying to churn and burn, so to speak, because I feel to be really, really effective at churn and burn, I would like to have more capital in my bot, which I don't need it, but if I'm going to trade it, I like to trade bigger. It's just all personal preference. That is not to say, I know that there have been a lot of people, like if you're in the Discord group for Acuitas, there are a lot of people killing it. But because I've gone through there and I've looked at examples, people are always posting, look what I did today off of this pair and this and that. So there are people killing it. I am in particular not killing it. But that's because of just the way I've been doing it. I've been super, super busy, which is one of the reasons why I have J-Rod on here to help me help you, because I just have not been spending countless hours with this like I used to, even though I plan to when the market starts to turn around a little bit more. All right.
All right. Can you see my screen there?
I certainly can.
I still see myself. Okay, cool. All right. So you said you wanted Neo. I had EOS up here, but we'll swap it to Neo.
I mean, it doesn't matter.
No. All right. Well, yeah, it doesn't matter. We'll do Neo. You said Neo. We'll do Neo. All right. So let me go over a couple things here in the settings. The main things we're going to look at is your SMA time frame and this low band buy. In the Acuitas system, and this might change. I had a user actually give me a pretty good argument for why we're doing it wrong. And I explained to him it wasn't wrong. It was just more of an interpretation. When you do a Bollinger Band, what you're really signifying, what these outer bands are showing you is volatility. Okay. If you notice, when the price isn't moving, the bands have tightened up. Okay. So it only takes two inputs to make a Bollinger Band. It takes your SMA, right, which is your simple moving average. So you put in the number of bars, we're going to count across, and it takes an average of that. That average is this line here in the middle. That's your SMA line that you define. Okay. You define your SMA up here. Why does that matter? Well, because if I make it really short, if I calculate with less bars, let's do 10, you'll get a wildly different chart. Okay. See that? Because now it's only looking at volatility. It's only comparing 10 bars to do the volatility change. I typically like to do it a little longer. I think our default's 20. I'm usually in the 50 range if I'm on 15-minute candles. So yeah, to be clear, it's 50 of this number of this size candle. So 50 15-minute candles gives you your full window that you're going to do your calculation over to draw these bands.
Okay.
So I'll do it again. The second part of that is it's a standard deviation. So actual standard deviation math is several steps. So suffice to say, a deviation is a space away from the SMA. And you can notice it's the same on either side. So if price spikes up, it'll go, the bottom band opens up too, because it's just showing you that now the envelope is opened for volatility. So what we're doing with these is we're trying to say, look, if the price has gone below this buy line is actually a standard deviation away. So it's my SMAs here in the middle. I'm 1.24 standard deviations away from the middle line. Okay, what does that really mean? It means when price dips in a volatile situation, you want in. Now, it's not always good. If you look here, okay, it followed the rule. I'm in, but it continued to go down.
Right. And then before that, the entry was even lower, but it exited pretty much on the way to a pump. I mean,
well, you can't predict pumps, right? So like you have to have a rule set, and looking at charts, you're like, oh, it should have held on to that. But if you cut it off and make it to where you can only see this, how do you know that's not a good place to exit right there?
Yeah, well,
what I mean?
That's where the price trailer comes in, right?
Sure, yeah, you can do trailing. And now, typically in backtesting, I don't play with the trailing because I know that it's better in live. Because the other key thing to know about when you're backtesting is these candles are only made up of 4 points of data. Okay, you have your open, your high, your low, and your close. So, and say this candle right here, it opened here. That's my open. It closed here. Okay, that's the candle body. And then the high is the tip of this wick. That's as high as the price had gotten. And this low part here, this is the lowest the price has gotten. That's the only price data we have historically, unless we're storing ticks, which, that's a whole other discussion.
Would trading on a larger time frame candle, like instead of a 15-minute, maybe an hour or 4 hour, would that enable you to more effectively capitalize on those highs rather than,
You can't. Well, yeah, you figure what you're doing in a 1 hour candle, you've now compressed 4 of those 15 minutes into one. So you're riding a longer term trend is really all you're doing. If I do 1 hour over a month with those same settings, I mean, I can look and see, 5 trades. Okay. Nothing spectacular. If you want, we can do a 4 hour, do a 4 hour over a month, see what you get. Again, we're not really touching that buy and hold, right? But not bad. You did 2 trades over a month, which wouldn't be very exciting to bot on, right? These types of things are kind of more meant for a scalper's paradise. If I do 5 minutes on 7 days, let's see what we get there. Yep, terrible. Let's look at what it looks like. So, and that's because I have a stop loss, but I must have stopped out. Yep, I stopped out once, right? So sometimes having that high stop loss is cool, but you'll get nailed.
Right.
You have to calculate that in. And I have the bear guard on there, but let's see if I turn it off. This is the beauty of testing, dude. You can just keep
exactly. I love the back testing on this, man.
See, I turned it off and it's actually got me some more trades, right? But I have 25 trades. Here's one thing I need to look at. I am looking at talking with Jason about changing this guy here. So here's a perfect example of it. I would like to do a different cooldown. Right now, our cooldown is just a 1 bar cooldown. And here's what I mean. We entered, of course, the rendering is there we go. We entered here, we stopped out here, but then I was allowed to enter again. I would like to make it to where this is what's called a cross down. So in the strategy config, it's looking at all these variables and it sees when price has crossed down below this green line. It should be better if I were to say, look, this price has to come back up above my buy line before being allowed to cross back down. I think we just did the 1 bar stop or the 1 bar timeout because it was just a way to go forward, right? We had to have some kind of a cooldown. But I'm thinking strategy-based cooldowns are a better way to go because they're going to work with every strategy. You set this condition, well, that condition has to reverse before allowing that condition to happen again. So like in that case, this would have been a valid entry and that's a valid exit, right? You would this nonsense here would not have happened. Now you may have made some money here, made a little money there, but you don't know that, right? It could have very easily
it could have gone the other way.
Right. So by allowing it to kind of reset, I think what might be a better way to go about it. But in any case, you can see how that all works. And so
let's say I wanted to. So look, since you're using a Bollinger Band, you can go down to the chart again, real quick.
Yeah.
How would I set this so that if I want to buy at the bottom of the band and sell at the top? I mean, that's it. Like I wanted to buy in at the bottom of a band, sell it at the top of the band, and that's all she wrote.
We don't have a band exit for the top. It's a gain specific exit. So we have to write that in.
Okay.
And you could crawl the band. Yeah, I see what you mean. You might want to say the problem is just because you're at the top of a band doesn't mean you're in profit. Right?
Well, it depends on where you bought it.
It depends on where you bought it, which is why we use a gain exit, right? Because if
I see what you're saying.
Now we could do a gain as a confirmation.
Because the top of the band could technically end up like if you were to buy in. Well, I mean, if you bought in down here, and even if you sold, I mean, it would still be profit. At what point?
Well, it's because price can continue to go down, and then volume spikes up, and then you can hit the top of a band and still be below your entry. Like it can happen. That's
another one of those things that, like in a bull market, it's a lot easier to capitalize.
Yeah, right, yeah, right. I mean, so there's lots of ways to do. Like I said, like a confirmation would make sense too. We can do different types of exits. This is why, really, dude. Honestly, this is why VSB is the main goal here, because with a strategy builder, we can allow the users to combine these things the way they want, and we don't dictate what the strategy is. We do now because this is the way it works, right? We have to kind of build some ones that make sense and say, here you go. My dream is when VSB is done, we have maybe 4 or 5 like special ones that we built that we like, that are the secret Acuitas sauce, but you can also go build your own, right?
Well, so I have to make this. So I watched a lot of these, a lot of TA guys on YouTube, right? And they're all pumping signal groups. Join my VIP, right. Learn my, and I'm not going to say who it was, but I thought it was freaking hilarious. Like I watch this guy every now and then just because he's kind of entertaining, even though he doesn't even show himself. He doesn't show himself on the thing. But I was watching him and I was watching his technical analysis, and he's doing his thing, and he's like, join my VIP group, don't get wrecked. We're gonna bust this out and do this and that. He's like, he basically said, I just went long. Like I just went long after all this time. I went long. I'm in for the long haul, ladies and gentlemen. Don't get wrecked. Join my VIP group. And that night it took a huge shit. And I'm like, So every one of your VIPs just got wrecked because you told them not to get wrecked. So the whole point to this is, it's like the bot it's buying on these signals. It's not buying and selling on speculation. It's buying on what's actually happening, right? Like, this isn't, I mean, I guess in a sense there is some speculation, but it's like that's the whole kind of thing to the algorithm. Total gain 145%. What the hell did you just do?
Well, this is how not to trade in a bot, at least with back testing. I've had a lot of users. I just got to bring this up because I've had a lot of people play with this thing, and I've seen this get up to like 700%. They're like, oh, look at all this money I made. Mm-hmm. Okay, well, here's the problem. This is back testing. Back testing does not give two shits about anything other than what's in the candle. It doesn't know about exchange. It doesn't know about volume or books, nothing. It's just saying, buy, sell, buy, sell. It's good, it's good, it's good, it's good. Okay. These would not happen in a regular market, not without some long limits. Why? Because if you look at the price, there's only a 1 Satoshi spread. You cannot get any tighter than that. There is no middle ground here, right? So the books are going to be loaded up with lots of people trying to buy at 23 and lots of people trying to sell at 24. And the only time anything can move is when somebody crosses the line and says, yeah, you know what, I'll take it. I'll buy some at 24. Or, oh, fine, I'll sell some at 23. So the way this bot works right now is we don't have any limit. There's no good to cancel orders. It's all fill or kill, meaning we're doing a book analysis and we're saying, okay, I want to sell, half a Bitcoin worth of BTT at this price. And is there enough in the book to fill that? Because if there's not, it won't issue the order. It's just going to say, no, there's not. If I try to put this order through as a market, I'll get some of it filled at my price and the rest of it filled at somebody else's price, in which case I'm at a loss. Okay. So these are really misleading. Stay away from these. I mean, if you want to trade them by manually, great. You can, put a limit order in or better yet, you can even ping pong it. I'll show you the ping pong in a second, but don't try to trade these with, not only that, but the Bollinger Bands mean nothing in a 1 Satoshi spread. It just doesn't work. Okay. So
here's what I'd like to do. Go through, go back up to the indicators.
Okay.
And kind of like start by explaining, so that you've got 6 primary indicators in the platform.
Sure.
So let's start. Okay, dual EMA gain.
Yeah, that's the one you like. You were playing around with that just now, right?
Yeah, I like the EMA. To me, I have always felt like EMA is the most reliable. That's just personal opinion, I guess. But
and for your watchers or your viewers, EMA is different from SMA, meaning that exponential moving averages have the first. The bars in the front are given more weight than the bars in the back. So it's attempting to try to get a better gauge of what's happening now versus what happened in the past versus an SMA, which is a pure average across all of them. It'll be, if it's 10 bars, it's divided by 10, right? So the EMA is a little more complicated, but yeah, just so you know, it's front loaded. So you said what you have? You had 13 and something,
13 and 34. So what I've always used.
Okay, so we'll draw the 2. I'm gonna turn my gain down a little bit. I haven't run this on Neo, so let's just play. 5%. We'll leave RSA off. We'll leave trailing off. That's all fine. Let's run it and see what you get. Okay, so yeah, that's respectable, right? 7 trades over a week. You made 3% versus a buy and hold of 6. Okay. Now, here's another interesting thing. On ours, we're allowing you to set the cross direction. And what that means is you can have the EMA when the fast crosses up over the slow, you can buy, or when the cross crosses down over the slow, you can buy.
Why would I want to buy it crossing down?
Because what if you're putting spread on or trailing? I could look for a dip. Okay. So that my short-term trend has outpaced my long-term trend. And it's been confirmed. And now I'd like to go ahead and buy, but I want to trail it down. And you can try to. So
when you're saying trail it down, you're saying I wanted to watch for a buy at the cross down, but not necessarily buy at the cross.
Correct. It's a trigger condition. If trailing is on, this up here, this first part of the strategy is the trigger, and then the trailing takes place after the trigger has been met.
That is a beautiful thing that I didn't even know.
Cool. So the other side of it is, so obviously from a TA perspective, right? If you're buying on the cross up, what are you doing? You're trying to catch a trend up at the beginning. You're saying, look,
it's like buying at the first step of a staircase,
or trying to, yeah, sure, why not, right? And so you can see we've had some.
And trailing down, it's like you're trying to buy on its way down into the basement before it goes back up.
And to be honest, I mean,
I like that better. I'm going to have to play with that now.
Yeah, sure. And EMA spread is actually even better for that. But the EMA spread still needs some love. I need to get in there and we gotta change the exit condition on that. It needs to exit on a either pure gain or a gain confirmation.
What time frame? Okay, that's on 15-minute. Just out of curiosity, put that to an hour candle.
Sure. Over what?
A month is fine.
Month, okay.
Ooh, shitty. So, okay.
Let's see what happens. So basically, they were all good except I got stopped out. Now I can do the crow no stop.
Yeah, I don't use the stop losses.
We'll say the crow no stop. Let's see what you get. Okay, so there you go.
4%. So we're up 1% already.
Up 1%. Now we've, now here's the other thing I'm going to show you. So what a lot of people are guilty of is this is called, it's like data bias. What you're going to do is you're tempted to sit here and tweak and get you're going to extract the most you can out of these backtesting settings until you've got it perfect. And then you turn it on and it's like, it doesn't do as well as it did. It's because it's called data fitting. You've fitted your strategy to meet a specific set of data.
Right.
And in the future, the data is not going to be the same anymore.
See, I don't do that for that reason because I know it's historical. And while it could give you a really good idea as to whether or not the indicator is viable, it's on yesterday's news, man. Like you can never really. So show me an example of the buying down with the trailing on, because that's a really
okay. So now the trailing in back testing isn't as good as it is in real life, right? Because there's a lot that can happen. We do intra candle trading, so your strategy is going to be based on the size, the period candles you've set, but by default, you will be trading with the live price. If it's a gain exit, it's looking at live prices. It's not going to wait for a candle to close to sell. Okay. Same with the trailing on the buy. So you're going to get way different results, in real time versus back testing. But let's see. So we're doing a cross up. Okay. Now here's the other
cross
thing.
Down. I'm curious to see what happens on the cross down.
We want to cross down and let's do a smallish. Let's do a point, maybe a 0.2. See what you get. Whoops. 0.2. There we go. So we're at 441. So that was 3 trades. I forget how many trades you had before, but you can see. And this is why, because again, this is where the trail was confirmed because.
So that's actually, I mean, dude, that would have started all the way at the top. I'm pointing like anybody can see what I'm pointing at.
Oh, right. Yeah.
That's where it started watching and it trailed down.
Until it's all reversal. Because I don't know if you ever watched the trailing video I made, but I explain how this works. It pops open a window and price can push the window down. The difference is, again, in this case, if it was live or if it were live, this tail would have come into play because the window would have been pushed all the way down to here. So, and it exits out the top. So, and that's a pretty small trail. If I put it a little bit bigger, let's see what happens. 0.5. I like to trail in real time more often, but let's see. What are we at? We're at that's the 221 10 o'clock. All right. So
do the okay, we'll try it next. So now you're at 2. So I was gonna say add the sell trail also. So that's your
oh yeah, sure. Well, you're not gonna get one there. And then where's the other one? You probably won't get it there either, but let's look. And for anybody else who's doing this, if you're in TradingView, a shift click gets you this, this window here. You use that a lot when you're looking. You're like, okay, well, what if I wanted to get here? Well, there's a little bit of a gap there. That's an extra 0.5%. So, I could let's just try it. So I'm at 2 trades, 2%. Okay, so now I got 2 trades. So I did squeeze out that extra.
Yeah, see, that's
extra bit of love, right?
And you got 2 trades, but you're talking 2 trade. So you're doing that. If you're running, 10 different pair running something like that, that looks like some pretty good potential to me.
Yeah, Yeah, and here's the other key. When you find something you like, you guys can share them. You can go over here and you can save them. You can load them up. You can copy we have a Discord channel. People can paste stuff and share them if you feel like it. But most people just kind of play around and tinker and find their own stuff. But that's how the EMA gains. So very simple. It's just 2 lines, and we also have like RSI. You can do an RSI confirmation.
So while you're on that, explain those RSI settings to people. Like, why is the default where it's at, and what would you recommend looking into? Like, looking at the base default of those settings, why would I change that?
Well, because it's a confirmation, so it's a relative strength. I'm sure a lot of people know what RSI is, but it's a way to determine if you're in an overbought or oversold condition. In this case, I don't know what I was set at. What am I at? 14. Okay, 3060. Okay, so I think we need to change these colors. I think we have a ticket open to switch these colors because we have red as a buy and green as a sell, when really it's usually it's flipped everywhere else. But anyway, so here's our values. You can see that here's 30 to 80, which is what these are. Okay, your 30 and your 60. Here's your 30 and your 60. Okay, low numbers mean it's been oversold. High numbers mean it's been overbought. Okay, so what you're trying to do is match this up with these peaks. These spikes down here are probably where you've got an extra confirmation that it's a good buy. Obviously, in this case, we've taken ourselves out of it entirely because of the way our strategy is set. So I would say, I'm going to raise that up. I can raise that to a 40. And what that's going to do is going to take this 30 line and bring it up to here. And then you can see how some of those peaks are now within the range. So if I hit run, it should redraw. I don't know if I'm going to get any buys or not. Nope.
I don't use the RSI stuff because it just cuts all my trade.
Yeah, it's an option. Some people love it. It works in some case. Again, it's all about the toolbox, dude. If you're doing, you can do things like if you did Bollinger Band. I don't know if we were doing a 75% buy. Okay, but if you wanted to do a more aggressive, like a 50% buy with another confirmation, you could do that. You could say, you know what, I want to buy more often, but with a different confirmation in the strategy. Does that make sense?
Yeah. I'm curious is this making sense to everybody in chat who has an interest in response? Like, no, I'm getting it, but I just want to make sure if there are questions, I want to kind of give everybody a second if anybody has questions. And yeah, if you click show more in the description of the video, there's a link where you can get Acuitas if you don't already have it. Of course, everything's always in my description. And full disclosure, I probably should have said this before we started, but I am a 5% equity partner in the bot. So and then of course I'm an affiliate as well. So yeah, but it's not making me rich, I'll tell you that. But it's more kind of a labor of love. And it just I don't know what else to say other than that. This has been very helpful. Good. Okay. That's exactly what I'm hoping for. And, look, and while obviously I'm a part of Acuitas, Jared's a part of Acuitas, there are a lot of different bots out there doing different things. So, for people that want to be able to back test, set up individual pairs, get real specific in what they expect to happen during over the course of time, but they're not looking to trade every shit coin or pump and dump coin on the market. I think Acuitas is fantastic. Profit Trailer always did really well for me. Well, I shouldn't say always. I ended up with a lot of bags with Profit Trailer as well. So I spent a lot of time, like, I would trade actively and aggressively for a while, end up with a bunch of bags, throw it in sell only mode, and then just kind of wait it out and reset. And I did a lot of that. And that right now is good. I think, honestly, if you're trying to just trade everything on the market and you don't really care if you've got a bunch of pump and dump coins as bags and you're not worried about that for whatever reason. In a bear market, especially, I feel like Acuitas is primed for bear market trading. And I think it's my personal opinion is that it arms you with more tools for a bear market than the majority of the other bots, at least the ones that I'm familiar with. And by the time I'm guessing, because Gerard and I talked about additional settings and things like that I would like to see, he would like to see, and the rest of the user base is looking for. And that's all in the works. So by the time the bull market starts to turn around, I think a lot of the things that I think Profit Trailer actually has going for it are going to end up becoming a part of Acuitas as well as feature options, and it'll be a one-stop shop. So I look forward to getting to that point. Crow, it is also really good for those that like coins but don't know which ones will do better, like Bitcoin, XRP, Ethereum, etc. You can set settings for all. Worst case, you're holding decent coins. Exactly my point.
Right.
You can use it to accumulate if you want in a roundabout way. But I'm always down to beef up my Bitcoin position over time if possible. But if I'm holding a bag, I'm fine with that. Bots can be great. They just do what you tell them to do. They're not magically get rich bots.
But you can't marry them.
yeah. And that's very true. And the way you set up your bot is going to be really dependent on the particular pairs that you're looking to trade, how aggressive or how reserved you want to be, how risk averse you want to be in the trades. You can get profitable trades less often with like bear guard using the RSI settings and things like that. You're going to get a lot less trades, but you're going to have less likelihood of catching bags. So now this is a particular indicator that I know jack squat about, this Ichimoku. I've seen it referenced quite a bit, but I've never used it. I don't know anything at all about it.
Yeah, it still needs some love in the bot itself. The strategy itself is solid, if that makes any sense. The engine behind it is, but I'm not very good at making good Ichimoku strategies. It's really, really good at hanging on to good trades. I've been trying to tweak it to get out.
What's the principle of the indicator?
So yeah, I have a pretty long video on it. I did about 25 minutes where I described everything if anybody wants to check it out. But the long and the short is these clouds are essentially sentiment. These two lines here are your Tenkin and your Kijun lines. Think of it kind of like a moving average. It's just not. What it's actually doing is instead of doing an average of all these prices, it's actually picking a high and a low in the past. In a displaced past, and then projecting that to the future. That's why you can see these, this cloud is out here. That data is actually calculated here, but it's been pushed out. And same with the Chiku span, it's further back. So it's kind of complicated, but really the long and the short of it is, it's just a way to try to visually gauge trend and take action based on various crossing conditions. You can buy when price has popped over a cloud, signifying, hey, it's coming better. You can trade when these Tenkan-sen crosses. There's strategies that say, hey, if this crossed up, if my fast crossed up the slow and I'm over a cloud, let's say, that's pretty bullish. In this case, you can see it crossed down and then actually went down further. Same thing here. I think that was a Kumo breakout. I have to look at the strategy that's in there. But for instance, the same thing that I did here to get in was also the same thing I did to get out in reverse. So it holds on too long. So I'm trying to tweak it to make it to where there's another way to exit out. It's a real big deal in Ichimoku to determine what the trend is. It will eat you alive in a sideways market. It's like the opposite of a scalper strategy.
Really?
Right? It's meant for trend. And so that's why people talk about using it on longer candles. I don't know if it's going to be any good.
How does it function on a downtrend?
Well, it won't buy if you're a longer term. It's only going to buy once an uptrend is technically quote confirmed, right? Which is why it's more patient. A lot of times, though, in crypto, by the time you've let your patient strategy execute, it's time to dump. Everybody else is going, all right, I'm out. So in this case, yes, he still didn't even come close to the buy and hold. So it's a little erratic.
Explain the buy and hold percent.
The buy and hold is, I'll show you. We'll do 1 hour, 1 month. Let's see what this looks like real quick. And we can adjust these lines too, but okay, yep, see, pretty bad. Okay, so a buy and hold says, I bought here, I never sold it. It's just telling you what, of course, it should be higher than that, I guess. have to look at that. This says that should be around 50%. Where are we at?
Is it averaging out a percentage over the actual trades made?
No, that's a good question. Unless it used that in the calc somewhere. Huh. I'll have to ask Jason. That's roughly, 50% minus 22 gets me in the realm of 32.
Right. Yeah, that's what I'm thinking.
Yeah, that's a possibility. To be honest, I haven't even looked at that part of the code in so long. But in any case, the idea of a buy and hold is, what would I have gotten if I just didn't sell, right? My strategy told me to get in here and I just hold it. Now, is that smart? That's, I don't know. Ask somebody who traded in September where they're at with their buy and hold.
Right.
You know what I mean? So it's like the idea of this quick scalping trading is to essentially get your stack together, get your stack up in a volatile market without having to deal with a buy and hold. Maybe you can make some money in a volatile sideways market. Your buy and hold won't, but a scalping day strategy will. And your stop loss should ostensibly keep you out of, really bad long bags, right? Trying to beat your buy and hold, right? And sometimes it's just not possible. And in this case, geez, good luck with. You give me an indicator that would have told me to buy and hold this whole time.
Is it possible for people to download the bot and just experiment with it without actually having a license yet?
No, we don't have that ability. Yeah. I mean, it's been kind of discussed a little bit here and there, but no, currently the decision's been made to, we do a lot of videos. We talk about it. We have people using it. We think it's fairly priced. I mean, if you look at the competition,
what's the, if somebody were trying to get the bot right now, like they were going to go and buy Bitcoin to get the Bitcoin to buy the bot, what would it cost them in fiat today?
0.05 Bitcoin, which is, I don't know what that is, about $180 maybe. Let me see.
Pretty cheap. Man, I remember when I was promoting and using Profit Trailer, man, and like price was up. People were paying like $1,000 for that.
Oh, it's insane. Yeah. And so we think, I mean, and remember this, this license is you own it. This isn't a SaaS type product, right? It's, you buy it, you have it. It's the point release versions will work forever as long as the exchange still doesn't change. We're going to support them for as long as possible. So I personally, I think it's a value still. I mean, either, if there's people really on the fence, I don't know.
I tell people in chat and stuff when they ask me, what's the price of the bot? I'm like, well, it's the same price forever. But if you're trying to buy in with fiat now, you can just buy the bot today and sit on it for 3 to 6 months. And by the time the market's turned around, the bot's already made you,
right.
Like whatever the difference is in fiat, you know what I mean? So yeah, that's kind of the way I look at it.
We made that decision a while ago. We don't think we price things in Bitcoin. We want to get more Bitcoin. We're definitely crypto maximalists. So
right.
That's the way we decided to go with it. So it's 0.05. Now, now, of course, if Bitcoin's $100,000, we may have to think about it, right? But
that's the thing, man. If Bitcoin's $100,000, you want a bot that's going to help you accumulate more. It's just the higher the higher the price of Bitcoin, the higher the value of the bot. Technically, I mean, if you think about it. It's like, because if Bitcoin's $100,000 and you've got a bot that can help you accumulate more over time, you're literally printing money and there is value to that. So I don't know. I mean, it's kind of like everything else. It's like you can either get the bot now, and if you want to wait for a bear market or a bull market rather, or you want to wait until the next bull run, well, you've got it. You just keep updating it with the updates and experiment with it until you get confident and all that. But anyway, I don't want this to be an infomercial. I was just I'm like, people are asking, can you get a trial? And I wasn't sure, to be honest. So what's the trailing ping pong? Like, what is, for somebody that just wants to see their bot dinging and donging constantly with effective trades, regardless of, wow, okay, 59%.
Now, again, it's not, because I picked a specific pair to do this with, right?
You're BTT.
I'm back to BTT again, right?
Mm-hmm.
But what we need to do to make this more usable is Jason's working on editing live pairs. So currently, the way it works is you set this thing up, you got it in live trading. It's pretty much set. You don't get to change the parameters of an actively trading pair. So on the board that we're working on now is the ability to edit the trades live. And this opens up a couple of things. One, it opens up, we had a lot of people love to sit here and just put this on a screen and go in and they want to change the price. They want to make their own windows, right? It's kind of like bot assisted trading. They want to get in there and tinker and in real time change these things, but then let it go for a couple hours or whatever, because of the trailing. So that's what's cool about it is you can set your own window, and yet this, again, when you have a trail, it's a trigger. So if you wanted to trigger here and it went lower, you would get that lower price, hopefully. But it's not terribly useful when we don't have live editing, right? Because pairs will get out of the range that you set, and then it doesn't do anything, right? Once it's out of this range isn't dynamic, it's static. So we'd like to make that dynamic, which brings it in line with some competitive products. I won't name any names, but there's another product out there that does pretty much that, and people love it, right? It's like, we already have that. It's not a big deal. We probably need to get a trailing stop in because we're doing trails on buys and sells. We are not doing a trailing stop loss, which would actually help. I can do another thing when we get that put in. I'd love to talk to you about it. But this is more like, hey, we knew that there was a need for people to set their own buy and sells, just a real simple strategy. But not terribly useful until we change the editing live. And that, okay, there's the EMA spread. So let me load up what do I have on here? Load settings. Oh, no, I have none. Okay. Oh, well. Well, let's run one. So the difference here is, we still have two EMAs, a 12 and a 26. This is the buy spread. What that's doing is it's looking to, let's just pick one. Okay. It's looking at the spread of difference between these two lines, your fast and your slow, okay? Your fast has dipped below the slow by approximately 2.88%, okay? I have it set at 0.2, but because built into the strategy is a kind of a trail. Our spread has logic inside of it to follow all of this and try to get in at the lowest point, which you can see it did there pretty well. It thought it was uptrending right there. So the other thing is the exit is set by a positive spread, which we need to fix. I want to make that a gain, like we talked about that earlier. But to get it on a negative dips, the spread is really, really good, dude. I like it a lot. But could be
EMA spread is that's pretty much the only indicator that I use for profit trade.
Yeah, I mean, it's and you can kind of do it other ways, but again, this is all really built in. We're giving the user just a handful of things to change. And the defaults are usually fine to start with. We had some internal arguments and discussion and fun about trailing a trail because really, the trailing is kind of built into the strategy already. I can't really show you, but it does. It actually looks for, as it's coming down.
947%.
What? Oh yeah. That's broke. What happened there? Yeah, that's what? Yeah, that's not good.
Bug fix.
Yeah, that's definitely not right. And that's not even, look at the, It's like it just didn't calculate it right. Oh, well. Try it again. Yeah. Jason!
Yeah.
Well, there's the problem right there. It's calculating fees wrong for that one. I'll have to look at that. I'll make a note right now. EMA spread. Okay. Good news is that doesn't affect the trading engine at all. That's just a calculation.
Yeah.
It's a visual thing. But in any case, that one's pretty cool too. So
yeah, I've noticed too that I'll experiment, but oftentimes I got to the point where I would just throw it on an indicator, load up the default, and hit run, and that was typically more profitable than like my experimented.
You know what's funny? We had a user. There's a user that said he made an obscene amount of money. And I'm like, really, dude? I said, what'd you use? And he says, pretty much your defaults.
The defaults are pretty, yeah. Like,
and he showed me this. I mean, I've seen the results, and I was like, oh, all right, you're not lying.
I mean, the reality is that in my opinion, I would say that just about any setting configuration can be profitable in the right market. It's the question is, what is going to be the most profitable within the same time frame? So that's where you're trying to fine tune things. How to get the most trades.
And that's where it's really hard to compare apples to oranges with products, right? Because you can't really lay them against each other because you don't know how the guts work, right? Unless everybody exposes all their guts and says, yeah, okay, we're now on the same page. Market sentiment is huge, knowing what market you're in. And that's why the live editing of trades is kind of a big deal for us, because it also opens up dynamic adjustments. For instance, you have to set your trailing value, right? But what if you could set your trailing value based on things like upside volatility? I don't know if anybody has ever used the feeder product, but that's really all that's doing is it's editing profit trailers configs in real time, right? And because it's using this text-based file, all it's really doing is overwriting that over and over and over again. So we can do the exact same thing, just better, because when we have a better database. But once we can edit a trade live, we can then feed it in dynamic data to then change the trades in real time. So you might say, okay, if I've got lots of high wicks on all this as it's trending up, well, that's upside volatility. Therefore, I may want to expand my sell window by a little bit. We can get our math wizards on what that number should look like, to dynamically get you better trading, trailing on the way up or the way down based on the previous activity in the pair, and do all that in real time. You don't have to sit there and figure that out. The machine could do that for you. So that's the kind of thing we're looking at for some of this. But this pair actually didn't do bad. Yeah, it's a 845 against a 975 buy and hold. That's really not terrible.
CMA spread, right?
No, that's back to Bollinger Bands.
Oh,
yeah.
What couple questions that I had, and then we'll probably wrap this up is
Sure.
So no question number one: are future upgrades free?
Yes. For the way the licensing works is we're doing major point releases. So like right now we're on 1.x, right? So you buy that license. We want to do major upgrades every about 18 months, 12 to 18 months. So your version will never expire, but once we get to the next point release, or not the major release, 1 to a 2, we're no longer going to upgrade the old version. We're not going to turn it off, but upgrades won't happen to that version. You'll have to upgrade to new license. Existing license holders get a discount, VIP guys get a little bit of a better discount. But that's just because that's the way we have to do it to keep building software.
Yeah, it's better than a monthly fee.
Yeah, there's no monthly fee, and like I said, and within that window, we're upgrading all the time. So yeah, we're not nickel and diming you. It's like you buy it.
And realistically, if you have the bot, you're running it for 18 months. If you haven't made enough money to make up for
an
upgraded version, then something's wrong.
Maybe it's not for you.
Right. It might be time to just turn it off and call your financial advisor.
Just give me your money. I'll deal with it.
Let's see. Yeah, it's on Binance. Well, you can trade on different exchanges, I think, but right now it's primarily used for Binance. It's gonna be set up. I'm guessing it's gonna be set up on Crow's Nest X when it launches, but there won't be as many pairs to trade on Crow's Nest X initially. I mean, it could be. We'll see what gets set up there, but all right, cool. I think this was good stuff, man. I think this was I actually learned some things. There were some things that I still hadn't figured out or seen. So this is good video.
Good.
Yeah.
I'm glad.
Digging it. And it seems like the audience, the viewers have enjoyed it quite a bit.
Right,
as well.
If anybody listen, if everybody wants to dork out with us, we do our own little stream. We do the round table. We talk about just regular crypto stuff. And then, I do the videos on the bot itself. I'm trying to be as explanatory as I can without, getting too crazy, right? I don't know who the audience is. That's a problem with making some of these instructional videos. It's like, where you start, you start too low and people turn it off. You start too high, nobody knows what you're talking about. So
I think the sweet spot, and this is an experiment that I want to try and run. Especially when the market starts to really turn around a bit. I want to see, like, if I bought the bot and traded with $100, what could I turn that $100 into in 30 days? That is going to be an experiment I'm going to do at some point in the future, because I think that is, if you spend a couple $100 on the bot, if you got $300, you buy the license, you start trading with $100. How long does it take for you to break even? And then from there, how long does it take you to like double your money overall? And I think that is going to be a sweet spot for a lot of newcomers that don't know anything about bot trading. They're not going to risk a lot in a bot they don't get or understand yet.
Right. We don't want them to.
Right.
We don't want them to.
I mean, exactly. So, I think $100 is going to be the sweet spot. Like if you could turn $100 into like $500 or $600 in a fair amount of time, I think that'll get a lot of people to at least buy the bot and learn it and really establish a foundational knowledge of it, and then they'll start using more and making more. And I think that'll be a good starting point. So at some point in the future, I'm going to try that test.
Yeah, I said our idea was just to try to make something that was easier for people to use. I mean, it was just there's so much out there. There are some power tools out there, but good luck.
Yeah.
You know what I mean? Some of them are pretty pretty tough. That's just our opinion.
Yeah, I experimented with a lot of stuff back in the day. I spent some money on different bots, and most of them I didn't even talk about because they did me nothing. They did me no good, but take up my money. I mean, it's funny because I actually bought the first license I bought was for something called Leonardo. Wasn't even really an auto trading.
I had Leonardo.
Yeah, like I started playing with that. I'm like, well, this is kind of cool, but it's not really doing anything. So
yeah, it's pretty bad. It's pretty bad.
And then I got Gunbot. Gunbot, I know, made some people money, but I found it to be just a complete waste of time. And like I messed with that for 3 days, did everything I could to learn, to understand, and then that's when I found Profit Trailer. And I was like, "Holy cow!" And I started banking. Like,
well, it's funny, Profit Trailer was actually that came out of Gunbot.
Like, did.
Yeah, LBRY was actually trying to help him fix his code. There was some problems with Poloniex way back in the day, and that developer wouldn't listen. And so LBRY was finally like, "I'll just build a proxy," and he built this proxy that the Gunbot would go through, and then realized that, I'm only a few steps away from just making it a bot. Like I don't need it to be a proxy. It was already rewriting all the Gunbot commands so that it would work. And that kind of turned into the Gunbot community proxy turned into Profit Trailer. So,
wow. I did not know that history.
Yeah.
Wow. Well, my hope is that Acuitas is going to be the leading bot in the next bull run. I want to see 50,000 people running Acuitas making trades. So, J-Rod, man, thanks for your time. Thanks for joining me. Thank you, everybody. It's great to see everybody in chat. I'll be back probably later in the week with some pretty significant updates on what's going on because I've got a lot of stuff happening. Yeah, grow your coins. Love you, miss you, mean it. And I'll see you guys soon. Have a good evening.